Canada could be sitting on the biggest housing bubble of all time.
Rents are high, interest rates are through the roof.
Got housing, house prices to income ratios that are off the charts. It's got
possibly the most difficult market that many
Canadians are
facing.
facing. I can't buy anything. I can't afford the rent these days. Like, I'm.
But there's a lot of us that are drowning so bad.
I feel so utterly stuck.
I was born in Canada, working as a corporate accountant for over 20 years, and never in my life have I seen the Canadian housing market this bad before. This is absolutely insane what is happening. In October 2015, the average across Canada's 35 major cities was $966. Today, 8 years later, the average rent in Canada is $2,078, a 215% increase, with a 21% increase per month compared to July 2021. An average one-bedroom rental in Vancouver will run you just over $3,000 a month, and a two-bedroom just shy of $4,000. These are returns wanted by stock traders when there's a strong bull market. And housing is in the same boat in the same Canadian storm. Mortgage rates are averaging 7.5%, the highest they've been in almost 23 years. Canadians are severely over-leveraged and wondering what to do, as some want to buy into the market but simply can't afford it.
People don't have a choice but to rent because they can't get a house or they can't qualify for a mortgage.
Housing is too expensive, food is too expensive, childcare is too
Our
expensive.
landlord increased our rent by $7,000 per month.
Others are wondering if they should sell, as it's becoming too expensive, but are just sitting tight, riding the mortgage roller coaster, waiting to see what happens, praying interest rates don't go up. The average person can't afford a house anymore. People that were in homes are now homeless. People are going into severe debt, or will be soon, and the problem is only going to get worse. Much worse. I'll go over the actual causes of this insane housing market, the current state of Canada, and how we got here, the steps other people are taking to be financially prepared. This red-hot housing market may end up severely burning many people in the process, causing many to lose their house, their life savings, or keep them on the hook for mortgage payments for years to come, in some cases, even if they've sold their house. Here is Toronto's trend line of the housing market over the last 30 years. And here is the affordability benchmark for most people. We are seeing a decline in housing sales from 2020 and 2021. Home production is slowing, and interest rates are predicted to keep increasing. A scary situation is a person not being able to afford a home, and as prices continue to rise, they are slowly priced out of the market. However, an even more terrifying situation is that a person is able to buy a home, and when they do, payments balloon to twice the amount. The person isn't able to afford the mortgage anymore, so they are forced to sell. And when they do, they not only sell it at a loss, but they're on the hook to the bank for the full amount of the original mortgage they took out. Most people, when they graduate college or university and finally land a great position at a company with a decent salary, and they're between the ages of 25 and 35, usually think about purchasing a home. However, the goalposts continue to be pushed further and further away for young people as they struggle to come up with the down payment, as home prices are rising faster than salaries. The young couple that struggled to come up with a 5% down payment on a home now continually has to come up with thousands more each and every year. To quote BBC News, the average home price in Canada is currently $716,000, with Toronto and Vancouver ranking as some of the top most unaffordable cities in the world. And this price has doubled since 2011, when the average home price was only $352,000. Here's an idea of what we Canadians are up against. If this familiar home were for sale in Calgary, it would go for $700,000 to $800,000. Toronto, $1.5 million, and in Vancouver, an easy $3 million without breaking a sweat.
Now expects prices will be up 7% in the fourth quarter compared to the same period last year. Now that is down from its previous forecast of 8.5% gain in that quarter.
Now some people are struggling to come up with that down payment, but others are kind of riding out the storm, sitting on the sidelines, waiting to see what happens. Buyers don't want to buy a home currently in Canada and then have it suddenly drop in value, and sellers don't want to sell because it's more expensive to move, and also they don't want to sell it for less than what they paid. This is creating the perfect storm in the Canadian housing market. The situation is actually very dire. At this point, the Canadian government seems oblivious to the harsh reality many Canadians are experiencing.
It's a difficult market, and it could be possibly the most difficult market that many Canadians are facing.
Downplaying the seriousness of the situation as they usually do.
How the hell is anyone existing in Canada? Like, I feel trapped.
They are proposing changes that will eventually ripple through the country and the economy, but these changes will take years to begin to have a strong impact. Many Canadians, including myself, are saying that we need change now. People that are going broke and having mental breakdowns don't have years. We were told healthcare would see a turnaround, but many are still waiting months just to get in to see a doctor. It's ridiculous. So what the heck is going on? Interest rates have gradually been increasing over the last several months, and current home values are ridiculously high, currently over a 6.3% increase from just last year, and it could keep climbing to 8.5% like I said. Currently, the average 30-year fixed mortgage rate is 6.27%. That means for a $500,000 home, your monthly mortgage payment is $3,280. Here is an average home in Vancouver going for almost $3.4 million, and it was built in 1940. If two-story home prices start to increase, those increases begin to ripple out to townhomes, then apartments, and then rental prices go up. So everyone is affected, but it always starts with single detached home prices. As I touched on earlier, Canadian home prices have doubled since 2011, while wages have only increased by 25% over the same period. Interest rates were around 3.3% for 3 years, but as soon as COVID hit, they hit an all-time low of 1.5% for a 5-year fixed mortgage, the lowest fixed rate mortgage in Canada ever. And variable rate mortgages were even lower. January 1st, 2022 was also almost a record for variable mortgages, which came in at 0.85%, the lowest easily in the last 5 years. People were able to buy a home with a really low interest rate, and there was no indication that the interest rate would increase anytime soon. However, beginning in early 2022, interest rates began to increase to combat inflation and restart the economy after the COVID pandemic, jumping from 0.5% to 4.75% in just over a year and a half. For the average Canadian family to currently be able to afford a home, they need a median income of $180,000. However, their actual average income per year is $121,000. So we're about $60,000 shy. So where is this money coming from? How are some people continuing to buy or live in these overpriced homes? Debt, and a lot of it. Canada's household debt level is the highest in the G7 countries of the world, and these numbers have increased since 2021 drastically and makes Canada not only vulnerable to any global economic crisis, but also if a recession were to hit.
Yet in Canada, the numbers have shot up to 107% as a share of GDP.
There's a lot of debt going into buying housing. If the economy goes south, handling or paying off all of this debt is going to be extremely painful.
These are the steps and what you need to know so you can make the best financial decision right now. Population increase. So why is housing so expensive in Canada? It's not like we don't have enough land. However, most of the people are concentrated around the major cities in Canada. Canada grew by 2.7% or over 1 million people in 2022, the largest growth ever in its history. At the same time, however, the national average home price soared to a monthly high of $805,000, which is 31% increase from 2021. This population boom is the result because, well, people have to live somewhere. So this causes an increase in demand, which results in a shrink in supply. Thus, on to the second reason, lack of supply. When I first read this, I thought, you know Canada is a lumber supplier, right? Well, of course, it's not just lumber that goes into building a house, but many other materials as well. And this is causing supply chain challenges, with many materials used in home construction. The Canadian population is now over 40 million according to Statistics Canada. Supply needs to be increased to 5.8 million homes by 2030, says CMHC, and currently we're at only 40% of that mark. There is also a shortage of skilled labor in the construction trades, adding another pinch to the supply bottleneck. Carpenters, plumbers, electricians, and project managers are all in demand. New affordable housing needs to be built and approved, leading into the approval process. In Canada, depending upon the location, it takes an average of 10 to 16 months to build a house. But it's not just the construction. The real-time sucker is the paperwork, such as the applying for the permit, license, land development, and zoning restrictions, especially in major cities. This government red tape bureaucracy can add an additional 2 to 6 years in the process, or 8 to 10 years in total. For comparison, in Texas, from start to finish, this whole process takes an average of about 6 months. The problem keeps spreading. High housing costs are no longer just being isolated to major cities, but are spreading to more rural areas. People are looking outside of the densely populated cities towards more attractive, less populated, smaller cities and areas for affordable housing, which is causing the problem to spread to those locations. If a person with a high salary moves and buys a house in a cheaper area, such as a small town or a rural area, they further contribute and compound the lack of supply issue. Investors. Immediately people assume and think as I did, foreign wealthy investors. In actuality, this makes up only 1/5 of the investment in the Canadian real estate market. The remaining 4/5 is through domestic investors. Many wealthier upper-class people are now making REITs, real estate investment trusts, part of their portfolio. Investors who can't afford to purchase real estate or buy a property on their own pool their money together and purchase a property that shows promise in increasing in value. In the past, this was limited to commercial properties or areas of land, but with investing becoming easier, REITs have gained an enormous popularity in the last several years. Transitions have slowed. Many people are holding onto their homes because they don't want to sell, or maybe they just can't afford to sell. Many buyers and renters can't get into the market at these record prices. Those that do have a home aren't looking to sell and transition into a larger home for fear of interest rate hikes or a looming recession. This is causing them to hold on to their homes, watching the market and waiting to see what happens. Also, if you consider closing costs, moving expenses, realtor fees, and actually people are buying more house for less money due to the increase in home prices. It's actually cheaper to stay put. Printed money and debt. The Canadian government printed money and handed out $240 billion in compensation and $576 billion since the start of the COVID pandemic. The Canadian government is addicted to debt, and a lot of it, often printing billions of dollars to fund projects. Productivity. Canada has not remained competitive and not been a leading cutting-edge producer in many years. The median age of the top 15 largest publicly traded firms in Canada is 122 years versus 45 years in the United States. Many new corporations face stiff government regulations protecting legacy companies and deterring foreign investment. We've just fallen behind in the race of innovation and offering superior products. Here are the precautions you can take to alleviate your financial situation and what other people are doing. 1. Look into short-term fixed mortgage rates between 1 to 5 years. A rate shorter than 5 years, say only 2 to 3 years, will help you if interest rates fall within that time, as some are predicting they will. 2. Look into starting or increasing an emergency fund to act as a buffer for emergencies. 3. Pay down your debt as much as possible. Interest rates will probably increase, so you want that debt down as much as you can to as low as possible, or at least to a manageable level. 4. Avoid refinancing or buying big ticket items such as a new car if possible. 1. It will increase your debt level. 2. You'll be paying a higher interest rate. 3. You need to free up cash and increase your savings.
Households with mortgages, for example, or any other debts, car loans and so on, are paying hundreds of dollars more per month in interest charges on those loans.
5. The Bank of Canada's interest rate hike may be coming to an end along with inflation. Look into alternate sources of supplementary income, as this will help your financial situation, especially if a recession does hit. 6. If you can afford a house and you need to get in now, watch the markets for a good rate and a good price. A deal, such as a person being forced to sell. Most likely, if it's a good deal and it's listed on the market below the market price, which probably won't happen, it won't last long. It'll go quickly. 7. My personal opinion is that the market is overpriced and I would not buy into it at all. However, my advice at this time would be to not buy a house. I personally think that this is one of the worst times someone could buy it. Why? Because houses are overvalued. If you do buy a house, depending upon the price, you will be in a bidding war. I've personally been in these before, and they are not worth it. You're left afterwards with regret, wondering if you panicked and made the right decision. It is not worth it. I'll leave a link in the description below for the Government of Canada's website on what to do and managing your money when interest rates rise.